Good NFP day, warriors. Hi, Alexander. I don't know what happened to Mike Delfino. Anyone know on the team? Okay, James, how are you? Sinatra.
Negative Ghost Rider.
Okay, Mike. I came in. Patrick, AJ. All right. So we had a rout yesterday in risk. But you know what? Again, with risk off, no big safe haven buying in the dollar. Dollar's on the verge of breaking down. Maybe it holds here. I was a little disappointed. I was looking for one more low in Aussie. I mean, if we ended up with a double bottom. We'll see what happens on the NFP. Um, you know, if we get to 450, I'll start. Maybe it'll happen next week, but that was my area, which is 78.6 back on the Aussie. You can see it right here. This is 78. No, that isn't it here.
Yeah, we came really close. I mean, we were within about 20 pips of what I see as the 78% retracement.
I had it at 64.50 something.
59.
Uh, 59.
59.
Okay.
Yep,
All
that's
right.
what I
So,
have too. Yep.
all right. So
We came close.
close enough for government work,
That's right.
I guess. And Canada's diverging.
I,
So if you're
I
gonna,
I'll tell you right now, I got stuck short in that thing. Kman's been playing that on the long side, and I've been short just because I'm like, thinking the equity markets are going to bounce back.
yeah,
And it just grinded higher. I think I took like a 40 pip loss in it yesterday. I'm like, yeah, I don't even want to deal with that thing. It's one of those that looks like it just wants to take out 140, but we'd have to see
good.
some really strong jobs data today.
Well, something we have taken out is 5,400 in the S&Ps. Um, I saw an interpretation. It didn't go, it went a little higher than Greg expected, but he was calling this a four, which implies that this decline is a five, which would complete the first wave down. Also, you're starting to get some three drive looks in VIX. VIX is up sharply again today at 2058, but I don't know, breakaway gap, but you know, one, two, three. So we'll see.
This is our playground, Dale. When VIX is up at these levels, anything for me over 15, I'm just like, I'm a happy man. Himashu asked, "Is there a NFP competition today?" And there's
Yeah,
an NFP competition every NFP. You just have to answer to the tweet that went out earlier this week. Matter of fact,
I've
go
I'll
posted it.
ahead.
Don't you
I'll
see?
grab it and I'm going to put it in the chat and make sure you have to answer to that specific tweet. So respond to that one because that's the one where we will take the numbers from.
Hello?
So
Do you hear me?
yeah, hey K
I
man.
just posted it.
Oh, you did. Okay. Yeah, thank you very much. Okay, yeah. So that one that K man posted, respond to that one only please and give us your best guess. I mean, I'm guessing that we create 1.1 billion jobs today, Dale. What do you think?
I think the market would like a strong number to allay the fears. I
Oh,
think the
hell yeah.
market came off on recession fears. What's notable, though, is that silver got back all of its losses. It was down about 70 cents yesterday. Gold, even gold almost gave up the ghost, being down 10 and recovered. So I was looking at what held up well yesterday, and I'll tell you what didn't is a lot of the miners. Look at this one. Look at this one.
Yeah.
And this is kind of a blue chip. So
Mm.
earnings. So some of the miners, despite the rallying in metals, they're not making money. Okay. So yeah, I mean that's almost back to where the move began here in First Majestic. And you know, they're kind of like a Coeur d'Alene used to be. Here's the daily. So we haven't taken out the lows. Probably, you know, should be looking at the long side of this. But God, what a bloodbath in semis.
A
And they're called 10
dollar
lower.
dollar bill says that we're cutting out, and I don't hear you guys sound perfectly fine to me. So, unless I have a lot of people complaining, then chances are it might be you cutting out. So everybody
Okay.
else says we're good. So, dollar bill, go check your internet connection.
Your
You can,
hamster.
yeah.
Make your hamster
Here's,
run a bit faster.
yeah, and here's SQQ, which, you know, I told everyone I was buying SQQ calls. I took part of them off here and I got back in, but not with the full position yesterday when I saw it turning higher. Um, you know, pretty nice move in SQQ, you know, close to 50% from the bottom. So we'll see. Looks a lot like the VIX, right? You know, third drive up here. So, you know, we could be within, I don't think any later than Tuesday, completing this first wave down, if that's the right count. Otherwise, you know, these dialecticians, if that doesn't work, they go, well, it's just 1, 2, 1, 2, 1, 2, and it just keeps accelerating.
Hey,
But, you
come on,
know,
you can't bash the Ellioticians. Greg is
well,
not here to defend himself. Come on.
I'm not just talking
That's
about
that's
him.
hardcore.
I'm not talking about him, but, you know, this VIX call was pretty good down here, and then pointed out old support, new resistance. So there were a few opportunities. No one even wanted to talk about VIX, so I told them, well, why don't you just cover up the title and trade the chart? And that was down there. So what do you guys think? Kay, are you a little surprised at the euro? Euro pound. I
Yeah.
brought that up the other day that it
Mm.
looked like it was either bottoming or there's going to be one more drive, but I don't think it's such a good sign for bears that we're all the way back at 85 again.
Yeah. Good morning, Dale. Good morning,
Good
everybody.
morning.
Risk. There's one word yesterday, risk. If you look at the risk pairs, that's what they've done. And all of a sudden, because it was extremely quiet in sterling, actually sterling was doing pretty okay after the Bank of England, but then the ISM just killed every risk pair that there was. If you look at most of the risk pairs, and there's a typical risk correlation, which was not really being traded too much anymore, but it came back with a vengeance yesterday. That is euro versus commods, euro versus sterling, euro emerging market. It all came back roaring with a vengeance. Of course, Swiss and yen, but that's a different story. But actually, euro crosses ticked up as well, and sterling being a risk currency at in its days got hammered. So the market must have been a bit long sterling, including myself. Luckily, not too much, but I was a bit short euro sterling and long sterling Swiss, and so I got taken out of those. But really, I mean, was real small risk, really. Yeah, it's really risk that got hit very, very hard. If you look at silver underperforming gold to a certain extent, you look oil is lower despite lower yields. That's all risk linked to lower activity indicators, right? We've seen the ISM, even though we still have services to come out, which may be an even bigger piece, I think. But if you look at the activity, which is the employment index in there, it was really, really, really bad. Where I mean, it was the worst employment index in the ISM since 2021, since the COVID period. So, and I think that's where the market got a bit surprised that it was so low, and so risk got absolutely hammered. And I think what we saw yesterday is a completely blueprint of not a blueprint, but a reflection of a risk off market, a big risk off market.
Yep. And this was a huge, before we broke down, I said this is the most important chart. It turned out to be so.
Dale,
Yeah,
can I show you something about the
you
dollar
could,
yen?
yeah, go ahead.
Yeah, check this out. So I'm and by the way, Kman, you said something really important in the chat room early this morning. You know, one of the benefits of being inside of the ForexAnalytix community is you know, I get up and here just show you guys what our community looks like for those of you that don't see it. This is when, you know, I get up in the morning. Remember, it was a slow day. I mean, everybody's popping in now ahead of the jobs report, but you know, Kman and a lot of other European traders have been in here ever since earlier, you know, for me and posting charts, talking about everything that's going on. But you made a really good point this morning, Kman, about what's happening in global yields.
Mm.
So what's happening in global yields?
All the developed yields are coming off, and it's really that is a clear indicator of slowing activity as well. When you go, and I spoke about it on the flow show as well. The market is now really trading a slowdown of the activity, and that is typically going paired with lower equities, lower risk currencies as well. If you price lower activity, the market is actually now virtually pricing a recession. And so we are going to have to pay really close attention to those numbers coming out in 20 minutes, because if they confirm this kind of idea, we could be in for a rocky road Friday. But on the other hand, we have already come a fair way. Look at, just pull up the US 2-year yield, for instance. We are back at January levels. And this is where the market was saying, like, okay, recession in 2024. Oh, look, we're back there. I mean,
Right.
we are again there. So,
So they were a year off. What's the big deal?
sorry?
So they were a year off, predicting it
No,
last year.
well, they were
I'm kidding. I'm being
7, 8,
facetious. Go
7,
ahead.
8
Go
months,
ahead.
but we've tried the same thing in 2023, and then it didn't work. So um, there is a bit of caution to be had with everything, because if you get a good report this afternoon, people may scramble to get out of some of those positions as well. But no, if we get a confirmation today of this slowing jobs market, it's could really get a little bit ugly.
And
Because
look
we
at
are
this
on
sea.
big levels.
I want to reference just the sea of red. I
Yeah,
mean, look across the globe. I mean,
yeah.
it's nuts, right? I mean, you know, you know, observations like that when you step in and into the markets, like for me, it's 3 o'clock in the morning and I'm like trying to get my head around, you know, it's like I always use the analogy at 3 in the morning, I got a cup of coffee, I sit down at my desk and it's like somebody just threw a 100-piece jigsaw puzzle at me. And it's like, put this shit together. And I'm like trying to frame out the outside of the, you know, outside of the, you know, puzzle really quick ahead of, you know, this show. And, you know, going through and just going back in the chat rooms and just, you know, scrolling back and seeing what things have happened overnight and with people that you trade with every day, they kind of get you up to speed. That's what trading's all about, and that's what, you know, our community is all about. So you guys make sure you find a community like that, because it helps a lot. But I want to show you this is the dollar yen. This is a daily chart, and look at how big a support we're at, Dale. This is what I wanted to show you. I mean, huge, right? Go ahead, K-Man. What?
No, I was just saying massive, massive.
Yeah, massive. Yes, it is big time, big time, big time, big time. And I'm not saying that we're going to stop here, because you look at the Nikkei. I'm just going to take you over here to the Nikkei really fast. I just want to show you a chart that was posted in the S&P room in the ForexAnalytix community, and you guys can see what it looks like. This is a nasty looking chart. Not that one. It's same chart, but this is false breakout to the upside, reversal. We're approaching, I think by next week, we should probably be around 34,000 here, but well below the 200-day moving average. We'll probably end up finding support somewhere down here. But I mean, we're getting to levels that, you know, you would think there would be a bounce, but you know, you pepper on some weak employment data today, and I think the market's obviously preparing for that right now.
Yeah.
you put in an unemployment rate at like 4.2% or something like that, and you're going to see global equities continue under pressure coming into early next week, including Japan. I mean, think about how Japanese investors feel after these 3 weeks of a big reversal that we've seen here. I mean, that's pretty disgustingly gross, right? So, just real big one. One of the other things I want to show you guys this morning too. I know we had Apple's not really, it's kind of flat this morning, but look at Amazon. We're talking about the global consumer here. We're gonna open up down here below 170. I mean, that's a big head and shoulder pattern.
Once it took out 191, which is something I warned people once we got over 191, don't be long under 191. And we had a couple tests of 191 to short it there. So it looks 140.
It's gonna open up and break down territory. And the thing about Amazon, it is a global seller, and you get a really good picture of what's happening with consumers around the world here. And just I think a big name worth watching. You got cryptos like Bitcoin looks vulnerable below the 50 DMA here. We start getting below that, we're probably going to trade back down towards the mid 50,000 level, towards this channel support. You guys can call it a big cup and handle, whatever you guys want to call it, bull flag pattern. It doesn't matter. We can come, we still have a lot of downside here, especially if risk continues to come unglued. And you look at the S&P. The S&P, as Dale pointed out, we're back below 5,400. We're probing last week's lows, which is the 38% retracement, and that's important from a continuation point of view, because when you have a rally like you've seen, we've been in obviously an insatiable bull market for a year and a half, I guess. But when we're pulling back to a 38% retracement, this is where the rubber meets the road for continuations. Like, if the market's going to continue to all-time highs, we really have to stop here. We start getting below the 50% retracement, and then the probabilities of moving to all-time highs from here diminish quite a bit. So, between where we're at right now and maybe this 5,300 level, 5,285, something like that, this is going to be very, very important. And we get below that, and next thing you know, we're trading below the 200 DMA, and then we're opening the door for some really big, not your garden variety 10% pullback. We start looking at, holy shit, do we go into a bear market, ahead of the elections or not? That's how big this is, in my opinion. So watch the S&Ps going into today. One of the other things that's really crazy, and Dale, I'd love to get your input here. Look at crude oil. I mean, crude oil is reversing, and I don't know about you, but I thought there was some risks happening in Iran and Middle East and everything else. But look at crude oil just coming unglued again. I don't know if this is a buy down here or not, but it looks pretty gross. What do you think?
Yeah. Tough to be long anything when you have this liquidity stuff going on. Definitely doesn't look as good as the metals, or there are other things to buy.
Yeah.
But I just can't be short this thing because of the, you could say, okay, nothing's happened, and then you put shorts on and something happens. So that may have been just another bear market rally. We really have to get back over 80 or the recent high we had. But I wouldn't be short crude. I mean, there were better shorts, like Amazon.
Yeah, all right. Well,
right?
Yeah,
Okay,
this is one of those, like, you sure as hell don't want to short it on a Friday in this type of environment, because
over the
anything can happen over the weekend, right?
I mean, Iran is talking about, who knows what the retaliation will be.
Right. Yeah.
So I don't know.
Yeah. So now this morning, and I'm going to talk about something a little bit more recent. We just got some commentary from Pill. Kman, what do you make of the sterling here? I mean, I think we're at some pretty critical support, channel support, previous breakout areas. We've had a decent pullback to the 38% retracement, kind of almost wiggled everybody out, myself included, this morning, or excuse me, overnight. But we also have the euro sterling back at 85 pence. It's a big, obviously it's been a big level for, if Ryan was here, that would have been the first thing he would have talked about this morning. I would think.
Yeah.
So what do you make of the sterling?
I spoke about it as well. It's obviously a big level. I mean, the sterling has been hit by risk, like most of the risk currencies, and the market probably being a bit long sterling as well. As soon as we broke above 84.60 on the euro sterling, it started to run. And as I said, sterling is a risk currency, but fundamentally, I don't think there is much reason for euro sterling to move much higher. So get a really bad report. I think we may overshoot this euro sterling a bit, get some perhaps stops out of the way, because there will be some above 85.15 probably. But I'm looking at any move up to mid 85s to try a short again, whatever happens to risk, really. Because I think fundamentally there's not too much reason versus euro, at least, to be short sterling.
Yeah, I mean, this should be a decent pivot to play off of. I mean, don't you think? I mean,
draw a trend line from those highs there. You will see you arrive somewhere around 85.70 or so.
Okay, so you think it could reach all the way up here?
Yeah, I mean, you never know on risk, on an absolutely crap report. Who knows?
Yeah. Well, let's be okay.
If you look at how the markets reacted on an ISM manufacturing, not even services, but manufacturing data point.
Right.
Imagine if we get a 0 NFP and 4.3 in unemployment.
Yeah,
So can we agree that it's different this time, that the dollar is not getting safe haven bids during risk off?
Yeah. Selectively.
No.
Can we? I mean, we suspected that might be the case, but now we've seen it.
Yeah, I mean, yes and no, but I'm always in the camp, Dale, that the dollar is not your go-to risk off. It is when shit is completely hitting the fan, that's when you start buying the dollar. Like, if we were down, if the S&P was dropping at let's say a 3% a day clip consecutively for like a week, and we're down 15%, the dollar will eventually catch a bid. So it takes a little bit of time. I think the macro backdrop tends to lean more into that initially. You can see the risk off bid in the Swiss franc. That's the real, and maybe the yen's, obviously BOJ this week, but the Swiss is what's been really the driver. What do you say, Kay, about the dollar?
Yeah, and it's also selective, because if you look at the mix, for instance, that the mix got hammered, and Canadian dollar is actually higher. The dollar CAD is higher. I think that's all to do about the Canadian data. US proximity makes same thing. So if you get risk off, you have to be a bit careful which dollar you sell. But I agree with Dale, because we have seen the first leg of the correlation, that is, stocks lower, the dollar higher yesterday, because the euro dollar couldn't find a bid. I think today may be different. You may have a little bit of a knee-jerk reaction on the dollar, but if the data are really bad for US, I think today the dollar could get a bit of a knock on the head.
Yeah, and let's talk about that. I want to ask, and I'm going to tell you real quick my opinions. I'll just give them, and then I'd like to hear what you guys have to say. If the data comes in weak, which obviously the market's expecting, I don't want to chase the dollar yen down here. As bearish as I am the dollar yen, we are on a 618 retracement. We are at long-term support or close to it. I think I just showed you that trend line, and if I drew it maybe right to the tip, and don't say that's what she said, because I know somebody's out there thinking it. We're right here at support. So I don't want to chase it, even though yields are dropping. I wouldn't want to buy it, but the dollar yen's not my currency of choice. Euro is my currency of choice. We have a bull flag pattern, and I think so many people are leaning into short euro everything that euro could easily squeeze back to 109, maybe even up towards 109.50. That's been my plan literally all week from the week ahead video.
You wanted to buy the euro under 108, and you got it.
I'm long already. So I'm adding on week data today. Now, a strong data though, I think you have to look at the dollar CAD. I mean, I tried to fade this week. I found myself on the wrong side of the market. I know Kman's been playing it on the long side all week. This thing looks like it's going to take out 140. So strong data, I like dollar CAD. Weak data, I want to be long euro. You could be maybe even pick, pound dollar, probably get a nice reversion to the mean type of trade. Those are things that I'd be thinking about. Kman, what do you think for weak and strong?
Yeah, I think, okay, let's start with a strong one, okay? I think strong you can correct in those low yielders. Dollar yen is probably going to trade 150 relatively rapidly. And then you look at dollar Swiss, perhaps back up to 87.80, and there we will have to make a decision. And I think on a weak one, I agree. The euro, I think very weak. You will see the equities drop probably, and then the euro go back to 108 the figure. But then I think you buy it down there with a 30-40 points risk or so. But the one that I'm still looking at is gold. I think if really the data start to really crap out and yields continue to go lower, I think gold is trading 2,500 quite soon. That's my view.
Yeah, and I mean, look, we're at all-time highs. It's not backing off. I mean, yeah, to ask yourself, if you were short gold, would you be crapping your pants right now? And the answer to that question is absolutely. If you happen to have a gold short position, why you would, I don't know, in a low yield environment or dropping yield environment. But if you do, you're definitely worried right now. So yeah, this is a great one, Kman. I like it. Dale, what do you think? How do you want to play this? Strong data, weak data.
Strong data, I'm still a dollar seller.
Okay, so you're gonna sell dollars on rallies. So if the dollar pops up to, let's say, 104.50, you still think the dollar is going to eventually break down towards this triangle support. I agree with you, by the way, but that's what you would do?
Yeah.
Okay. How about if it's just straight out weak data?
Stay with my short dollar positions.
Okay, so you're just playing the dollar. You're just playing the dollar as it is, and
I did it at 480 earlier this week.
Got it. Okay.
Took half at 104, and I didn't put any more out yesterday. I thought I'd have a chance to buy Aussie at new lows, so that's what I'm kind of holding out for, is see if we still could get a 3 drive to a bottom formation in Aussie.
Got it. Okay. So what you're going to see here, guys, is we have 10-year yields to the right. We have the S&P here right in the middle. On the left, I'm actually not going to put, I was going to put like the dollar yen. I tend to put the dollar yen on there over the dollar index. But today I'm actually going to put in just the dollar index because the dollar yen's had such an exaggerated move. And I think Kman's got it right. On strong data, we might see it recover, but how big is the recovery going to be? I mean, people are going to be selling right into strength if we can get back up to 50. So yeah, I think the move is going to be fairly limited. I think we can see the dollar index itself probably give us a pretty good response. Now I'm going to go over to ForexAnalytix. Alongside all the 30 tools or 30 instruments you have here, you have all the different analysis types, but you have tools like if you go over here to the calendar, you have your data flash, and I was trying to harass the guys at the Gelber Group yesterday. I'm like, yeah, you guys pay $2,800 a month for your Bloomberg systems, because that, when you trade at those prop firms, which when I was at Gelos and when I was at the Florida firm, I always forget the name so early in the morning. Anyway, that comes out of your pay. So you have to pay for your own Bloomberg, which is, mine was $2,800 a month. So that means you had to make at least that cost comes right out of your pay. So I'm like, well, I can get the data flash we have it inside ForexAnalytix, and this is the stuff that I really used on Bloomberg. So I'm going to move that over. I'm going to put the charts back up. And there's going to be all the data releases as they come out. We have less than a minute. Matter of fact, we have less than 30 seconds. So, Kman, which is the most important of these? I think it's unemployment.
Yeah,
Wait,
unemployment rate is very important, of course, besides the headline and taking over from the earnings side. Earnings will still be read, but no, perhaps not the most important. I think headline and then unemployment.
there. Okay, here we go. Here we go. Weak data.
4.3 unemployment, huh?
Woo!
14K.
Whoa, 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 whoa. Wow. All right. Well,
There's your dollar breakdown.
Yeah, there goes the dollar.
Yep. Yep. Oh man, and I'm just not gonna be able to get it the way I wanted it. That's unfortunate. So yeah, I've got to add a little bit to my dollar trades here. So excuse me really quick while I get to business. Let's go into the euro dollar just really quick, because the euro, this bull flag is going to play right into this resistance here. And then after that, we're looking at 109. So you gotta imagine this is probably going to see some one-way traffic here. Dollar mex, look at it, just broke out, doesn't care.
Already 100 points below the level.
Oh my gosh, what a move, guys. So
maybe the Fed has to go intermeeting. Although
you
that's
think?
against his religion.
You
That's
know,
against Paul's religion.
I perhaps wouldn't think so, but it may not be completely stupid, because Powell is putting a lot of emphasis on the jobs market right now. So, you know, never say never.
Yeah, everything can happen.
Right. I'm just sitting here going, I think I'm gonna close out. Oh no, I was gonna close out my US dollar Norwegian krona short, but I don't think I'm gonna do that at the moment. Big rejection at 11 again. I picked that up just ahead of the data. But look at the pullback that we're seeing in the Aussie. This is this risk off. You can really see it in the euro crosses. So take a look at the euro Aussie pushing back up towards this 160. This is going to break out. This is where you have to be very selective on how you're playing the dollar at this point. You know, what are you going to short the dollar against? It has everything to do with selection, individual currency selection, not so much like you don't want to be buying the Aussie and the Kiwi as stocks are, coming under pressure. Being long the euro, completely different story. So that's why you have these euro crosses. Even sterling crosses have caught a bid. Pound's probably going to be a decent buy here on pullbacks. Those are the types of trades that you want to be doing in this type of environment. Kman, you have any? I know you're leaving here shortly. He might have left. Yeah, go ahead.
No, I'm happy to stay long gold, and yeah, I mean this dollar Swiss as well. If it closes below 86.75, it doesn't look very healthy.
Yeah, dollar Swiss. Oh boy. And matter of fact, let me see what the Euro Swiss just hit fresh new lows.
Also coming off. So
yeah,
but euro sterling is not flying, so perhaps you that's one to keep an eye on. If it goes another 30-40 points, if it would go, maybe that may be a one to perhaps start to think about counter trading a little bit.
Yeah, all right. Well, it's
wishing you all a great weekend. I have to shoot Blake and Dale. Sorry, guys.
Yeah, no, Kman, you need to go pick up your family. So have a great one, and thank you so much. And Dale, I know it's I'm gonna get to trading, so I'm gonna sign off here, jump in the chat room with everybody else, and I got to make the day ahead trading podcast anyway. But I want to thank everybody being here. I hope you guys all, who won, by the way. Oh, we're not going to be able to find the winner of the podcast until after the weekend is over. So
I think I might have an interview. If Sean and Anthony are here, can you raise your hand? This was a reschedule.
Oh,
I can't find you guys. Geek Strategy guys, are you here? Going once, going twice. Write something in the text if you are. If not, you decided to trade the NFP instead of being here with me.
Oh my God. Are you watching this dollar yen? Absolutely.
Okay, Sean is here.
All right.
All right. Okay.
Well, do you need help grabbing him and bringing him over?
Let me see. SHAUN. I have them. So I'm promoting you now, Sean. And is Anthony here with you, or just you? All right. Well, you're here. All right. I got him, Blake. Listen, team,
right.
have a great weekend. Good job this weekend. Not good job. Great job. You guys mastered the yen. I know Kman left, but you own that yen for the last few weeks, Blake.
Thanks, buddy.
Stick with the girl you brought that you took to the dance, and that's Miss Yen. So
Woo,
anyway,
she was a beauty. I tell you, she was beauty pageant
yeah,
queen right there.
yeah, I'm
So
telling you, she's you know, may want to get engaged to that pair. So anyway, have a great weekend, team, and everyone out there. And I'm going to talk to Sean, Geek Strategy. Sean, how are you?
Pretty good. How are you today, Dale?
Well, how are you handling risk off? It's been a long time.
Yeah, we yeah, it's nice to see some volatility come back. And I just sent a link to Anthony to see if he can hop on here with us too. I went and found an old link that we had used previously.
Yeah,
And
they're the same.
very good. Yeah. So
Okay.
yeah, as you know, we like to look at trading in context of gamma and but of course that's only one factor. So we look at charts as well, and yeah, it's it's one of those things. Sometimes I get to where I'm a broken record, saying, well, it looks like we should see some sort of weakness or larger pullback than 3 or 4%, and the way the gamma picture has been for some time, it's been largely focused on same day expiration for the indices, especially, which has made it difficult to use gamma to look way ahead, like I feel like we could last year with a lot more visibility.
Do you have
But
anything
there
to
are little
share?
signs here and there.
Do you have anything to share? A picture speaks 1,000 words of
Yeah,
what you've been
exactly.
thinking and what you guys are doing.
Right.
Any
Yeah, I
visuals?
think, let's see, I think I was hoping Anthony was going to be the visual guy here. So
Okay.
let's see if I can get him on. I was just looking at Intel, which, of course, is taking a bloodbath today. And where I was going to head with that is that a lot of times the individual names might have a little bit clearer of a picture than the overall index. And this one certainly was showing.
Well, we don't see it, but I know it's been ugly
Yeah,
on the video. You're not sharing it. You have to go to share
exactly.
screen.
Yeah, let me see if I can if we can get Anthony on here as well. So yeah, he's I think he's in process of hopping on here with us. So yeah, I guess the market didn't like the NFP, the employment situation, huh?
Well, the market has been, it's just icing on the cake. So market
Yeah.
peaked with a really old school. Oh, there he is. Old school technicals like key reversals.
Yeah.
I mean, it wasn't like, there was no reason. Yeah. Okay. US dollar just spiked from NFP. Okay, so I'm looking for Anthony now.
Yeah, very good. Let's see.
Okay, there he is. Okay, Anthony, I'm moving you to a panelist. Accept it. Okay. Okay, Anthony, welcome. You're late. Do you have a note from your mom?
How are you guys doing?
Did the dog eat your homework and you didn't want to go to school, or the wind blew it away? Anyway, those were my excuses.
Yeah, he can blame me instead of his dog.
All right. So, Anthony, welcome back. You want to show us how you guys got short 2 weeks ago?
Oh,
before
sure.
this
Yeah.
decline happened? Huh?
Yeah. Well, yeah, sure. I'll share my screen here. One of the things we were looking at, I'm sure a lot of people, especially on Twitter, this was going around quite a bit. Can you see my screen here? This is
Yeah,
the
yeah,
AAII Investor Sentiment Survey.
right.
And yeah, back on July 17th, we had the highest bullish sentiment since last December.
Right.
And that was one signal to us that we could be nearing some sort of peak.
Mhm.
And yeah, I don't know. What about you guys? What signals have you been looking at?
Well, pull up a Nasdaq 100 chart daily.
All right. You can see here, I got the the SPY chart. We've been following this channel for
Well,
the
I mean,
past year.
you were asking me what signal I use, so that would be off the Nasdaq 100 chart.
Okay, here you go.
There you go, the key reversal. Then that's a QQQ. The Nasdaq 100 futures took out the previous day's high too, up at the top. So that was never negated. The S&Ps went on to make one more marginal high. We left an island.
Yeah.
So it just never recovered. It was all about NVIDIA and and semis. And that big rotation day when massive selling of tech and the record kind of day in Russell. So I thought that might be the hook, but then it's turning into my interview. People were unsuccessful shorting it all the way up, but they were shorting it because it was concentrated. Only the MAGA was really leading the charge. So then when it broadened out, the bears went into hibernation because now they're saying, well, now, that argument of narrow breadth isn't here. And my contention was what leads markets up leads markets down.
Absolutely.
And the Russell did not save the market. Okay. The broadening out did not prevent this decline. So that was my thinking.
Yeah. Yeah, and that goes in line to a lot of other indicators that we watch. One of the main focuses for us is gamma exposure, which is analyzing the options market to infer what option dealers are doing. And if you track, this is a chart we've been tracking. This is historical gamma exposure. So these are end of day gamma exposure readings. And you can see a shift, a sizable shift here on July 17th, where gamma exposure, which had previously been positive, dove into negative
That was the day of the
territory.
rotation.
Yeah. And that was a big signal. And July 19th was the July options expiration as well. And we oftentimes, when these big shifts happen, they will happen around OPEX. And since then, we have been maintaining in negative territory for the past 2 weeks. And that was also another big signal to us that, hey, there is a shift underlying the entire market happening here. And we've still, even yesterday, the last couple of days, even with the sort of dead cat bounce rally, we never made it back into positive gamma exposure
So did you have
territory.
anything actionable during this time frame, the last 2.5 weeks? Were you out of longs because of your gamma readings? At least you weren't long.
Yeah, so
Or were you long?
we did take several short positions. We were short the SPY. We did have some long positions. We were playing the rotation trade, so we were long names like GLD. We're long United Healthcare. And so more defensive type of names in this shift in underlying the market.
Okay.
Anthony, I was going to, and Dale, I was going to bring up trade that Anthony came up with going into the Fed that I thought was pretty creative. An iron condor that was basically based on implied volatility
spiking.
being, yeah.
Yeah, good point. Yeah, it was a long iron condor trade. Let me see if I can get this up. And
How many legs are there in an iron condor?
there's 4 legs.
Okay.
And I'll share this. We posted this we've been talking about it the day before the Fed meeting, that we were looking at some sort of either straddle, like a long straddle or long strangle play. We ended up going with the long iron condor. This is from our Discord. So you can see we posted this just a couple hours before the FOMC. We basically wanted to wait because since we're playing the options market, we wanted to wait to as close as possible. But basically we weren't sure, of course, of the direction. We had been consolidating in this range between 540 and 550 on the SPY. And we see this large gamma exposure concentration. I don't know if you could see it. This is at the 540 strike. That was a key level for us in the last, week or so. Price had been bouncing off of that 540 level, large gamma exposure. So today we're breaking it. So that's a big negative bearish signal for us of at least some continuation longer term. But this long iron condor play is interesting. We went basically August 2nd expiration. So that's today's expiration. So this was really for like a 1-day play. Buying the 555 calls, selling the 565 calls, buying the 545 puts, selling the 535 puts. So, we got out of that with a slight gain. And obviously looking at it today, we probably should have held it, or at least held the bearish leg of it, because we would have made a nice, 10-point move there. But still, it was a nice play for just a FOMC. We're still short the SPY. We have we currently have the 535 500 bearish put spread. And that expires on August 16th.
Okay. All right. So what do you see? We have a change of regime. The other indicator I use, guys, is called my sister indicator. So I've been talking about this for a month or so, that I talked to my sister, and she's not a professional trader, but she has IRAs and retirement accounts, and she said, Dale, I'm going to get out just before the election and then get back in after the election. And after I had that conversation with her, I go, I bet there are multitudes of people that think it's clear sailing until November, until the election. Mm-hmm. And that was a little bit too pat for me. And I thought that, we could have a summer shakeout, a summer scare, to get people to panic and put in some kind of low mid-August, mid-September, and then rally into the election. So that narrative comes from a telephone conversation with my sister, and it's playing out.
That's interesting how many people are trying to make investment decisions around the election.
Yeah. So if it was that easy, we'd all be retired.
Yeah.
Right.
I actually have my house up for sale, and my broker keeps telling me, like, well, people may want to wait on buying this property until the election is over. I'm like, man, really? People are making like house purchase decisions based on the election? I'm like, I don't know I don't know. It's like, I guess people, there's uncertainty in the air, so people kind of freezes them up with investment decisions.
Yeah. So, okay. So, you know, if there isn't anything more market-wise you guys want to talk about, was there anything that you had planned on talking about today that you want to, you know, we still have some time if you want to, or you could talk, maybe show your website and talk about your business model and what you do for traders. Up to you guys.
Sure. I'll just point out one thing we've been watching for the past few weeks. This is based on this rotation trade idea. Obviously, technology. So this is sorted by the past month performance over the past month, looking at all the different sectors, you know, in the market. Technology, electronic technology, technology services, obviously doing the worst. Healthcare doing health services doing the best, up 11%. Utilities up 9%. You know, things like financials up 5%. So those are some of the names that we've been playing long. We've been looking at Goldman Sachs. I mentioned United Healthcare. You know, this is the reason, and we think this rotation trade is, you know, going to continue to have legs into more defensive sectors that are going to perform a little bit better during this time. So
Okay,
I just wanted to point that
you have
out in case.
energy. You have a classification, energy minerals, up there. Is that a combination of oil and gold and silver and copper?
We can click
What is
on that.
energy? Okay,
Yeah, this looks like mostly the
energy.
big producers.
You like them?
That's a good question. I mean, Sean is more of an energy expert than I am. I've been eyeing USO for a play. In general, if let me just come over here. Just want to look at the chart real quick.
So, you guys, if you want to learn more about gamma and alpha and all the Greek stuff, right? But mainly you concentrate on gamma, right? Um, check out Anthony at
Yeah,
Strategy MX.
geeksoffinance.com.
Yeah. So Anthony, you have Sean, you have a comment on energy?
Yeah, well, I like the fundamentals behind energy long term, especially. I mean, if you go back, you know, a decade, I mean, energy really hasn't gone anywhere this whole time. I mean, big time secular consolidation period, even though it's started to come to life the last couple of years. And you know, you can look around and see what's happening in the world. And I know we have a lot of oil, and people say the same thing about natural gas, but I would say my bias is to always use data to make decisions to buy and sell, but I'm always looking for the time to buy energy, and I really have no desire to play it on the short side.
What do you
I was
think
looking at
about
Excel.
this? What do you think about this $2 level in the Widowmaker? It was trying to hold it. It was trying to hold it before the kind of little mini flash crash we're having.
I know, yeah. It's interesting. I was long natural gas, and anytime I trade natural gas, I always attribute a success at least partly to luck. But I almost top ticked getting out of this last time. I'm not always that successful with it, but I'm kind of, I don't like that the forward 3 months are. You know, I like it better when the future structure is more flat. And, you know, I don't like that 3 months out there's a premium to the future price.
So it's just a carry trade structure. And do you ever see it where it's a what they call markets when the front month is stronger? Not the carry trade, it's the opposite.
Backwardation.
Yeah, backwardation versus contango.
Yeah. Mandy has a little testimonial for you. one of her clients is using your gamma work for a strategy, and he's doing really well.
Oh, excellent. Hey,
Super
that's a nice little
reliable.
surprise to hear.
Yeah. Okay, Mandy, that's nice of you to share that during their interview.
Yeah, thank you very much.
Yeah,
How
appreciate
how
that.
did they hear about them, Mandy? Here, through here, or just find them on their own? Oh, okay. Mandy, you're all over the place. You're an influencer.
Yeah.
Okay. All right. So, all right. Tell people how to get a hold of you and what you guys offer for retail traders, so that they could do what Mandy's client is doing and follow your stuff.
Yeah, geeksoffinance.com is our website. We have tools and analytics for traders, short term to I would say intermediate term type trades, anything from zero DTE to let's say 3 month swing trades. We have our gamma exposure dashboard. Let me share the the site here just so you guys can see what I'm talking about.
So did you
One of
see
the one of
that? Did you see that Dale Pinkert forecasted this Nasdaq top and Nvidia top? You know that guy Pinkert?
Yeah. Yeah,
Uh,
he's a good market caller.
yeah, he got lucky. He guesses right once in a while. That's all. Uh, all
Yeah, so
right.
we've got our tools and analytics. We one of the features that a lot of our members love is our trader community Discord. We've got a ton of great traders in there discussing what they're doing. We're looking at and all this analytics,
Yeah.
and it's a very active
Cool.
community. And then for people who maybe are a little bit newer to, let's say, options or portfolio strategy, we have a 5 hour course, which is included for free for members, which goes through our entire trading strategy, how to use our tools, how we put together our portfolios, various different types of option strategies that we focus on, like iron condors, butterflies, etc.
Yeah.
So yeah, definitely check that out if you guys are interested. Come on into our Discord if you guys would like to see what we're doing in there. It's free. You can come on in and say hi, and we'd love to see you.
All right. Well,
Yeah,
look,
we got some.
and oh, as a guest. Okay, cool. And these guys are real. They're providing a great analysis, Sean and Anthony, and they're sincere about caring about outcomes for their subscribers. I hear it in their demeanor. So check them out. And maybe you haven't heard about them. They're not huge. Some of your most highly followed people on X and other social media doesn't mean just because they're very popular that they're great market technicians, tacticians. They're great marketing people, but it doesn't mean they're great at the market. So here's one of the diamonds in the rough that I have to thank Sean for reaching out back to me. I
Thank
think I
you.
had invited him for an interview a while ago, and we're all rooting for you guys. Next time you have a signal like that, keep me informed, and I'll pass it on to the community. And we'll talk again in the fall, my trading warrior brothers.
Sounds
Sounds
great.
good, Dale.
So much.
Yeah. And Anthony, that's it. You better be here on time next time.
I will. I'll set my alarm.
Otherwise, detention for you, at least a 1 day suspension in a dark room where all the kids could walk by and say, nah, 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 nah. Anyway, anyway, guys, continued good fortune for you. Hope that pips just chase you down and overtake you. So, oh yeah, Forest Gel, it's all Greek to me. You mean it's all geek? It's all geek to you. Get rid of
There
that
you go.
out.
That's
Or-
I always
right.
like this.
And
I always
there's
like
your
to start off my
tagline.
morning with a pun. That's right.
There's your new tagline. We came up with one for you. It's all geek to me.
Yeah,
That's
that's a good
good.
one.
You like that? You know, all right. All right.
Yeah.
I give people taglines. Was interviewing Chris Vermeulen, and you know, he's very disciplined, you know, has some mechanical stuff, and his tagline I gave him was diversify away from yourself. Which I think people need to do at times, or maybe even all the time, to smooth out their performance instead of having all their eggs in one basket based upon what they see as a discretionary trader. So, have a great weekend, guys.
Thank you. You too.
You
Gonna be
too. Good luck
talking to you
trading
right.
today.
We'll be talking right around the elections. So maybe you'll have your
Excellent.
house. I hope you get your house sold before then,
Yeah.
Anthony.
Yeah. Thank you.
All right. Anyway, get a new realtor.
Yeah,
If they're
exactly.
using the election for an excuse, get a new realtor.
There you
Right.
go.
All right. So that's a wrap, everyone. Have a great weekend. Do your work on the weekend so you're not analyzing. During the week, you're executing. And above all, don't just count your pips, count your blessings, and consider becoming part of not just Sean's community, but our community. You know, we're happy to bring on people that also have subscription services because we want you to find what works for you. Okay, so that's a wrap, everyone. Have a great weekend. Good hunting. Adios. Thanks again, Anthony and Sean.
Thanks,
See you
Dale.
guys.
Take
See you,
care.
everyone. All right, adios.